Do you recommend a subvention scheme?
It is useful for you. Why would you want to pay the whole interest if he's saying I'll pay it? Suppose you buy a 50-year-old property, why will he give you a 30-year loan on that?
Fair. It helps then to have a bank that's already checked these things.
It does
out.
help a lot. That is why many people actually take loans in India, because that due diligence process, even in a secondary purchase.
What if I like a house and there are legal encumbrances attached?
See, they will themselves tell you whether it's an acceptable risk or not.
Do you still recommend going in for such properties?
Of course, you want to lose your money, you should buy the property.
Welcome back to another episode of Prop Sutra with Balaji Rao. Prop Sutra is presented by Prop News Time. Last week we spoke about eligibility for home loans. This week we're going to understand what are the different aspects of a home loan, what sort of properties you can take a home loan for, what are things like mortgage insurance, and does it help to have a preferred lender? Let's find out. Welcome to the show, sir.
Thank you.
So last time we spoke about home loan eligibility. This week I want to talk to you about who can avail a home loan and for what purposes. So I'll start with the first question. Do I need to take a home loan only for a ready property?
No, not at all.
Okay.
You can take a home loan for an under construction property. Most people do that.
Does the process change?
The process doesn't change because you see, this is the second segment in a way of the home loan process, because one segment is to figure out how much are you eligible to take as a loan based on your income, age, your occupation and others, correct?
Yes.
The second segment is what are you eligible to take it for?
Right.
Can I take a loan and buy a shop? No. Correct? So, in that there is the concept of what you're really going to buy with that loan and what is the LTV going to be, how
Right.
much is that property going to cost, how much loan am I giving based on that value, the ratio. So, naturally then now the process of due diligence has shifted from the individual to the property. So now what the bank or the HFI will do
Yes.
is to figure out whether the property is eligible. So if the property has to be eligible for, say, under construction, they'll naturally want to look at the title, the approvals, radar registration and everything.
Right.
You understand? Usually most of under construction projects get themselves what they call pre-approved by certain banks and HFIs.
Okay.
If you go to those banks and HFIs, they would have already done that homework. But if you go to a project or you go to a lender
Yes.
who has not yet approved that project, then he will want all the project documents also.
Understood.
Okay. And suppose you're doing it for a secondary sale, you're buying a resale.
Yeah.
Then also he will ask for the property documents,
Right.
because he will want to see whether the property is now eligible for his loan. Suppose you buy a 50-year-old property, why will he give you a 30-year loan on that?
Fair.
Isn't it?
Yes.
So he will tell you the property will collapse in 10 years.
Yes.
Correct? So he will then look at the property and figure out whether the property is eligible. So the due diligence process of the lending agency moves from the individual to the property.
So we'll take it one by one. So like you said, in an under construction property, you have pre-approved loans. You also see a lot of builders advertising for subvention schemes. Can you help us understand what those are?
See, a subvention scheme, very simply put, means that during the period of construction,
Yes.
usually EMIs will not start.
Okay.
Only interest is charged.
Okay.
Your EMI starts only when you are put in possession of the flat and you can reside in it.
Okay.
Okay. So during that period of construction, when interest is being charged, who bears the interest? If you are the borrower, you have to bear the interest.
Yes.
Okay. But suppose a developer wants to sell his property and wants to make it attractive for you to buy or incentivize you into buying it.
Yes.
What does he do? He says, I will give a subvention scheme, which basically means that he says, I will take care of the interest,
Okay.
either fully or half or whichever way he wants it. Okay. That means the interest which you're going to pay during construction
Right.
is either being borne by the developer,
Yes.
complete 100% or 50% or whatever it is, and only the balance you have to pay.
Okay.
That is a subvention scheme.
Do you recommend a subvention scheme?
It is useful for you. He is incentivizing you, no? So why would you want to pay the whole interest if he's saying I'll pay it for you?
Sometimes something sounds too good to be true, it might not be.
No, it is not too good to be true in the sense that he's trying to pull you into his project by saying you don't pay the interest. No? See, for a developer's perspective also it's very useful.
Okay.
See, because the developer might need construction finance to complete his project.
Yes.
Now, that construction finance is usually higher than the interest which you would be paying on your home loans. So ideally, if I'm a developer, I can sell all my flats maybe on a subvention scheme and ensure I'm getting construction finance at a home loan rate of 8%, which otherwise, if I was to go for construction finance as a company or as a developer, I might be ending up paying 10%.
So it's cheaper.
So he's selling it and it is cheaper also. So that's why they're willing to do a subvention.
Now, these are pre-approved loans. Do I need to do my due diligence then when it comes to selecting the flat?
No, see, you will do your due diligence to the extent that you like the flat. You know, you will want to see what sort of a gentry, what sort of a neighborhood, because that a bank or a financial institution is not interested.
No, I understand that. Yes.
Okay. So you will do your due diligence from that point of view. But do you need to do your due diligence from a legal, technical approval point of view? Not necessary.
Okay. So that's, it helps then to have a bank that's already checked these
things. It does help a lot. That is why many people actually take loans in India, because that due diligence process, even in a secondary purchase, where they're buying an older flat, resale flat, is left then to the bank, because the bank is not going to disburse to you till they are clear about the legal title and the approvals.
Okay.
So automatically they're taking care of it.
Right.
But you will be paying for it indirectly through processing fees, what we call.
Last week when we were talking about eligibility, we touched upon agricultural land and non-agricultural land. Now in India, do you get loans for agricultural land?
No, you don't. But a farmer can take a loan, putting his agricultural land as a security. That's a separate issue. And let's not talk about that, because that's not what we are really discussing.
Correct.
So we are discussing more the residential properties and what has been approved as a home. So technically, if you buy land, it should be non-agricultural land.
Yes.
And you're going to buy land with the condition that you're going to construct a house. Most people will put a condition that you will construct a house within 2-3 years or a max 5 years. Because nobody wants you to buy land speculatively by taking loans and just flipping it as land. So yes, you can get a loan for land, but you will be giving them an undertaking that you will build on it within a certain time period.
So if it's just for investment purposes, you wouldn't recommend taking a home loan?
For buying land?
Yeah.
You won't be given a loan. If you tell someone I'm just investing and I just want to flip it, you won't get a loan.
So there are home loans available for just renovation, repairs, extension of your houses. What are your thoughts on that?
See, if it is necessary and you need to take it, I guess it's much better than not to do it. Especially if there are critical renovations or repairs to be done. Extension of a house also is useful when your family is expanding and you need that extra space. So they are very essential loans, useful at their own sort of a timeline to be availed of. So there's nothing wrong with that, in my opinion.
What if I like a house and there are legal encumbrances attached? There's a property dispute or there's maybe a civil case. Is it tricky to get a home loan for such properties?
Absolutely. See, they will themselves tell you, whether it's an acceptable risk or not. So they're bound to turn it down.
Do you still recommend going in for such properties?
Of course. If you're a high risk taker and you want to lose your money, you should buy that property.
No, I mean, would you recommend then maybe going down a personal
If a bank is saying, I don't want to take a risk, why will you say, I will take the risk? I mean, that will be a little bit too much.
What is an acceptable amount of risk?
There's nothing called an acceptable amount of risk, because, see, these are large payments, isn't it? This is not something which you're just buying for, it's not an impulsive buy. So when you're playing with your full savings and you're taking a loan or you're not taking a loan for it, why would you take any risk, in my opinion?
Fair enough. What, according to you, are the benefits of early repayment of loans?
See, many people pay off early because they just don't want the debt burden. They want their, off the head, so they do it. It's really not necessary, frankly speaking. It can run its course, and don't forget, it gives you a sort of a tax shelter to some extent. Might be little, maybe 1.5, maybe 2 lakhs. It gives you a tax shelter. It also helps you if you're renting out the house to have the rental income sheltered from tax because of the interest. So I don't think you should be in a hurry to pay off the loan. Suppose you really feel, look, if something happens to me, I don't want my spouse to be burdened by it.
Okay.
Then take a mortgage insurance. No?
Can you tell us more about mortgage insurance?
It just simply says that if you drop dead or if you lose your job, the bank or the insurance company, will step in and pay the bank on your behalf.
Can a lender force me to take a mortgage insurance?
Lenders usually love it if you take mortgage insurance.
No, but can they force me to take it? Can they say I won't give you a loan?
Some lenders do. They say it's their condition.
What if I want to take a home loan for a property that's not my primary residence? It's still my house, but it's, say, a holiday home. Will my use of the property then determine whether they'll give me a loan?
Well, some of them will be squeamish, what we call.
Okay.
Because you're saying as a holiday home is a second home. Because principally the way they read the psyche of the borrower is, if it is my second home and I'm not servicing the loan, so be it. For a bank, they don't like that.
Okay.
If it is my primary house, I will be forced by my spouse or my children or my parents to keep paying because nobody wants to lose the house.
Right.
So they are squeamish about a second home or holiday home.
Right.
Provided your eligibility is strong enough
Yeah.
to service that loan, you can get a loan. And it's not in the boondocks.
What do you mean by that?
Well, if you're suddenly going to tell me that you're going to do it somewhere in some village, then we will think about it. They'll think.
So
Because it should be within municipality limits and all that. So all institutions have their own sort of boundary.
So are you saying sometimes it's trickier to get a home loan for a property that might be in a tier 2, tier 3?
Not in tier 2, tier 3.
Or in a rural
If it is in
area?
a rural, semi-rural area, it will become tricky.
Does it help to have a preferred lender?
It depends on what you mean by a preferred lender.
Say if I've gone to HDFC Bank, for example, for a car loan in the past, I do most of my banking with them. Is it then better to go approach them for a home loan as well?
Well, if they are competitive in their rates, why not? They will be first amongst equals, the way I look at it.
Is it advisable to switch lenders midway through my loan if somebody else is giving me better rates?
Yeah, because naturally, if it is economically pretty much positive for you by switching someone, then it's called a balance transfer in the finance terminology. You will do a balance transfer.
Okay.
You will move away from the existing lender to a new lender.
And what are your thoughts on a fixed rate versus a floating rate?
Tricky question because usually a fixed rate would be higher than a floating rate.
Yes.
So psychologically, most people go towards a floating rate because it's lower.
Yes.
At any given point of time.
Correct.
Than a fixed rate.
So given our current economic situation, RBI recently reduced the repo rate further. Is this a good time to lock in a low interest rate?
I wouldn't advise people unless they're risk averse. See, because in a fixed rate, it is good if you're risk averse because at least you know your liability.
Correct.
It's fixed. But I wouldn't lock in because a country that is developing and rapidly becoming a so-called major economy, then what happens is usually the interest rates will drift downward.
Okay.
So if you're on a floating rate, you'll find your interest rates coming down.
Okay.
So if you're already fixed today,
Yes.
then you will not be able to enjoy the benefit of the slowly coming down interest rates.
Okay.
In a developed economy, it might go the other way. Like in US, there might be a serious danger if there's a recession or if there's a problem of stagflation.
Right.
Then you will have the interest rates creeping up. It's already crept up.
How do you see technology and AI shaping the mortgage industry in the coming years?
See, technology and AI will make the entire process pretty much online.
Yes.
And if your land records, property records are also going to get digitized, as we are all expecting it
Yes.
from the draft bill which has been tabled, then everything becomes online. So the speed at which you can get a loan or the turnaround time for an approval would be aided pretty much positively by technology and AI.
Right.
Okay. So I think it will be excellent in a way because it would be much more sharper in its assessment.
Yes.
And it would be much more quicker so you don't miss out on a deal. Sometimes people who take loans miss out on deals
Right.
because the seller insists that he needs the money within 30 days or 15 days. So it's going to help in far better market making, what we call.
My closing thoughts with this episode. Like last time, I asked you who should take a home loan. This time, I want to ask you for what kind of property should someone take a home loan? If I'm young, I'm earning well right now, but I'm not sure where I want to settle down, whether I want to settle down today. I'm eligible for a home loan. This might be my starter home. Should I really go down the path of taking a home loan and committing to 30 years? Or should I wait till I'm very sure that, okay, this is where I want to settle down?
No, I don't think in property you have to worry about whether you got the location right. Neither should you worry about whether you can time the market. I never advise that.
Right,
See, you buy a home when you emotionally need it first,
right,
when it's going to give you a certain relief. And to buy that house, if you have to bridge the resource gap by taking a loan, I personally feel you should take
okay,
the loan. Okay? It'll bring in you a sense of discipline that also you have to earn every month, you have to pay towards the loan every month. So it overall, I think it's very positive, if you ask me. So don't look at it as a burden
okay,
or a bane. It's more of a boon. And if for whatever reason you can't service the loan at any time, as I said, I can assure you it's very unlikely you will lose money.
right,
You'll still be able to get the equity you have put in, the money you have put into the property back. And I don't think you will really be in any way inconvenienced or disadvantaged greatly by doing a reset. Most of the time, I can feel as a rule, you will be able to see through the loan and make for yourself a useful asset. Especially if it is for a primary residence, I feel you should close your eyes and take a loan.
Well, then another emotional question I would ask you. The bank is giving me, say, 80% of what I desired. Now I have two choices. One is to purchase a house in a good, in a well developed location, micro locality, or to maybe go down to the outskirts and get something slightly larger that is more to my preference. Do you recommend one over the other?
Yes, I always believe if you are very financially prudent and you're scared of defaulting on a loan, then it's better if you buy a house where the market is highly liquid. Like suppose, say in the city of Mumbai, if you're asking me, should I buy a house in Malad vis-a-vis Boisar, for
Yes.
example, I will tell you buy it in Malad even if it's a smaller house because it will be easier for you to resell that house in a
Okay.
distress also.
Okay.
That is just a prudent measure,
Right.
So if you're very conservative, you
Yes.
don't want to take a risk, then buy the house which has more liquidity, easier to sell off, even for a bank,
In a better market.
in a better market.
Welcome to our new segment, Myths versus Facts. This is the home loan edition. If your CIBIL score is low, you will not get a loan.
Well, as I said, it depends upon the CIBIL score. If your CIBIL score is 700 and up, it's easy to get a loan. You're
Yes.
good credit. If it is in the 600 to 700, you will get a loan. But if it is below 600, then it becomes a little bit more challenging to get a loan.
You need to be earning in India to get a home loan?
Not necessary. You can be an NRI working abroad. You can show your employment abroad, your income abroad, and you can be eligible for a loan here.
Banks will finance 100% of your property value.
No, that's not a fact because banks always will stop at a max of 90%, but generally they're always comfortable with 75 to 80%.
Once a bank approves your loan, you will get your money instantly.
Not at all. That's also a myth because if a bank approves a loan,
Yes.
that is your eligibility, they also have to approve the property. And once the entire thing is done, there's a thing called documentation and a protocol which is followed. So it takes its time. So don't think it'll be instant.
Your age can limit your loan tenure.
That's a fact. Because if you're old, then your loan tenure has to be necessarily much lesser.
Home loans cover only the property cost, not additional charges.
No, most home loans will cover stamp duty and registration and all that also.
Okay.
They can take a look at it. But prudently, they try to do the property cost as the value
Right.
because the stamp duty and registration are not recoverable.
That's a wrap for this week's episode. Thank you so much for tuning in. Do share your thoughts and feedback in the comment section below. If there's something you'd like to hear about, do let us know and we'll take it up in the next session. Don't forget to like, share and subscribe and hit the bell icon for regular notifications. Until next time, thank you.